What's good, everybody? First of all, thank you for coming back, and I hope that the past videos have been helping you, and that you've been gaining knowledge from watching the videos and being able to apply the knowledge that you're learning to backtest, like to look at the charts and understand what's going on more and more, instead of being confused all the time. So yeah, and make sure you subscribe if you're new here. Watch the past videos. It's gonna make sense. It's gonna make more sense if you have watched all the videos. Uh, so far we've talked about okay, first of all, the introduction video. Then we talked about candlestick analysis. Then the trend. Then we also talked about market patterns. Now we're going to talk about major levels and minor levels. What this simply means is like where the markets like do find some sort of support or resistance. And okay, first of all, the markets move in terms of supply and demand. If let's say one currency is being supplied, like let's say at the banks, like they're giving away, they're like pushing forward more of the Great Britain pound, then that means it's being supplied. And if the supply means the demand, then it's just gonna stagnate. But if there is an imbalance, it's just gonna like tilt towards the side that the imbalance is, right? So for example, if let's say the Great Britain pound is being supplied but there is no demand, right? So the price of the Great Britain pound is just gonna like drop, right? It's just gonna like reduce. But if the Great Britain pound is being demanded, but it's not being supplied as much as it's being demanded, then its price is gonna increase. So it's simple economics, simple supply and demand. Uh, so yeah, that's pretty much what moves the market, like mainly, right? And like when that happens, you can like the market leaves levels where that happens, and then you can be able to use those levels to kind of like observe what could happen in the future, not necessarily predict, but observe what could happen in the future, right? So and these levels you can draw them on any time frame, on any pair, on any chart. Like you can just like because they're everywhere, literally they're everywhere. And what I mean by time frame is uh simply like if let's say for the daily time frame, one candle represents one day, right? If we're on the 4 hour, one candlestick represents 4 hours. 1 hour, on the 1 hour time frame, one candlestick represents 1 hour. 1 hour, like that's the time that elapses before one candlestick expires, right? So but like this candle, that's right now the one of 9 a.m. Eastern time, there only remains 41 minutes before it expires, right? So yeah, that's pretty much it. And yeah, let's look at how to identify like those levels, right? First of all, they're like, I would say, depending on the time frame, like we can divide the levels into two groups, right? There is there is the higher time frame levels, like which are the major levels, and the lower time frame levels, which are the minor levels, right? So for the major levels, we call them supply and demand, right? Which is basically like where you're gonna see the huge moves either to the upside or to the downside, and which is also where you're gonna know that this is where the imbalance happened. This is where the where they either supplied too much of a currency, or they people were demanding too much of it, and that caused a huge spike in the markets or a huge dip in the market, right? So and for the lower time frames, like anything 4 hour on the 4 hour time frame and lower is is minor levels, right? From 4 hour down to until the 1 minute, those are minor levels. From from the 4 hour and up, those are major levels, which are supply and demand. And for the lower time frame, support and resistance, right? So now we're gonna I'm gonna like identify, like as I go through the levels, right? So we can start for at the monthly, right? At the monthly we can easily see that here there was a huge move to the downside, right? Over how many pips? 2,000 pips, right? 2,000, almost 3,000 pips. So yeah, here you can see that there was an imbalance and that there was a huge dip to the out of the market. So this simply means that there was too much supply of the Great Britain currency, Great Britain pound, and that as a result price went down. Or it could mean that it could simply mean that the Japanese yen was in high demand, and in that case it would simply mean that there was like uncertainty in the world, which is because the Japanese yen is a safe haven, so people invest into it to protect their money. So yeah, and the banks as well. So here we can definitely see that there was an imbalance, and that people and that price and that the Great Britain pound was being supplied more than it should have been, more than it was demanded. So this becomes supply, right? This is where the supply becomes way too much and price as a result drops, right? So what we're gonna do is simply uh like use the rectangle tool to highlight the week, right? The week that's right here, right? Like this week, the week that where like the week where the the imbalance starts, right? And there you have your supply. This is all you have to do. Use your supply, and whenever price comes here, you can drop to the lower time frames and be able to sell, right? And yeah, that's about it for supply levels. We could go to a lower time frame to see more examples. Let's drop down to the okay, weekly time frame. Let's use a weekly time frame here as well. See, price went up, but you see that here that there was a huge drop, right? Let's say for example that everything on this side is not here. Yeah, everything here is not. Everything on this side is not there, right? You simply all you had to do was simply like draw, like highlight the week with the rectangle tool, highlight the week like this, and if price was to come back here and show again that exhaustion and show that that the Great Britain pound is being supplied more than it is demanded, the price is simply going to drop. And guess what happened? That's exactly what happened, right? So simple as that. Could have taken this trade and made a lot of money, right? That's for supply. Now let's go. Let's look at demand. Demand is simply like the reverse. If the currency is being demanded way more than it is supplied, then price is simply gonna go higher, right? So here already we can see that this is where a lot of market spikes happened. This simply means that this is where the imbalance happened in terms of supply and demand, right? So again you highlight the week, and I wouldn't say that you should always highlight the longest week. I prefer to highlight like the average. Like you just use your eyes, or if you want to use a calculator and use a whole meter, go ahead. But you can train your eyes to see like where the average is, like to see where the middle of all the weeks is, and use that, right? So for me, this is what I see, and yeah, see the price is being respected here. First of all, you see the price came here, and you started to see exhaustion, and then price spikes up. Same thing here. Price comes back and spikes up the same week, right? During the same week, it spikes up. Price comes back here, spikes up, comes back here, spikes up, comes back here, spikes up, and then finally pushes way higher to break above the previous supply. right? And if you drop to the daily time frame, you see that also here there's so many opportunities to take advantage of, and that price simply does the same thing over and over again. Whenever it touches a supply or demand, it first of all shows exhaustion. It shows you that here price is like being indecisive. It's not really like pushing below or pushing above that level. It's like staying at that level and fluctuating at that level, and then you can decide to enter or not and take the trade in the direction that the market is showing you, right? As if price is showing you exhaustion towards the downside, if price is coming down and then up again, that simply means that it doesn't have any more uh, power to go up. It doesn't have any more momentum to keep going in that direction, and all you have to do is simply find a nice entry to the opposite direction, right? uh, and that's pretty much it. Keeps doing the same thing. And also, as you have seen in the past videos, in the past video, uh, you're gonna know that you if you have watched the previous video, you already know that the market patterns are also important. That they show you that they simply like certain market patterns simply show you that price is gonna like reverse in this direction or not, right? So, for example, you could have simply seen that this was a double bottom, right? These two, these two right here, this was a double bottom, and the price was simply gonna go higher after the double bottom, right? Or if you refer back to the trend, to the video that I made on the trend, you could see that price here, if you go to the lower time frame, is trending downwards and then breaks above, makes a new higher high, comes back for a retest, and then flies higher. And also you can see by the lines I drew an inverted head and shoulder. So yeah, there are many things that come into play. Like they basically like you tie the strings together to be able to make up a bias and take the best entry possible, right? And yeah, that's pretty much it. And let's look at now the what support and resistance simply mean, right? Or let me give you a more recent example of what a demand is, right? Like you could simply draw over here, like the average, and see that here is where price sparked up. So you will know that if price is to come back here and start to show exhaustion, then it is most likely to start flying higher, right? And if we go to a lower time frame, we can definitely see that a switch in the trend and also like market pattern, right? So here price is trending downwards, lower low, lower high, lower low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. Fine, price finally breaks above, right? Now, you simply see that like that at supply or demand is where price is simply gonna like first of all fluctuate, show you exhaustion, and then if it was trending in a certain direction, it's gonna switch the trend. After it does that, then you can enter. You can look for your candlestick confirmations on the lower time frames, like on the 4 hour, on the daily, on the 1 hour, sorry, on the 1 hour, on the 30 minutes, on the 15 minutes. And we're also going to talk about entries in probably the next video, I think. In the let me check entries, yeah, in the following videos, in the following video after this one, we're going to talk about entries like dropping down to the lower time frames to actually be able to enter and have a nice risk to reward ratio, right? So yeah, that's it for supply and demand. Now let's look at support support and resistance. So when it comes to support and resistance, it's simply the same thing, but on the lower time frame, right? On the lower time frames, like on the 1 hour or the 4 hour, right? But I don't really like to use the 4 hour because the 4 hour is simply like it's kind of way too large. It's it's way too large of a time frame to be able to find nice support or resistance, because you're gonna find like really large ones, and you want your levels to be refined to the best that they can be, so that you can have pretty accurate entries. Because if a level is like so huge that like it takes up like, I don't know, like 50 pips and above, then it's not really like a level worth that much, because you don't know when in that level price is gonna like start to reject or switch to the other side, and you're gonna get confused. So I prefer to use the 1 hour, like the 1 hour and maybe the 30 minutes to find uh support and resistance, right? So what I mean by support and resistance, simply like the same thing, where price like switches and you're able to see the imbalance in the market in terms of supply and demand, or in terms of sellers and buyers, right? So for example, here there is a support, right? Support is for like where price is gonna fly off, where price where price is gonna become bullish, and where prices and resistance, simply where price is gonna become bearish, right? For example, here's resistance, right? Here's resistance, price drops, comes back again, drops. So it seems like same thing as supply, but on a lower time frame. And as well, and here as well. And mind you, this happened yesterday, so you could have it would have been very easy to take this. So yeah, price rejected here, came back again, formed a double bottom, a double top, sorry, and then dropped, right? And here as well, price formed I would say a triple bottom, right? And then flew. But here you gotta keep in mind the trend. The trend is always like is more important than the pattern you see, because if you see a double bottom in a downtrend, it's useless, it's meaningless. So you always gotta keep in mind the trend, which is why it's not flying as you would expect it to, because it's not in an uptrend. Currently it's in a range, but it's slowly starting to transition into into a downtrend, right? As you can see, you can definitely see the higher highs and higher lows switching into lower highs and lower lows, higher high, higher low, higher high, higher low, lower high, lower low, and potentially another lower high, which is gonna form a double bottom and then drop back lower, and potentially see the targets up to here. Or you could simply keep rejecting here and then break above these highs and then retest and then simply spike up, right? But that all depends on how the markets want to play out. And also tomorrow there are major news events which like they do disturb the markets and usually break the levels as they please. So yeah, you gotta keep that in mind as well. And I think that's pretty much it for this video. Yeah, I think that's pretty much it for this video. Okay, the validity of certain levels, right? Okay, first of all, if you want to know if a level is still valid, is it still being respected? Is price still reacting to that level or not? If it's simply not respecting that level anymore, then guess what? It's not valid anymore. But there are sometimes when it's not when it's like not really clear if it's respecting that level or not. Let me try to find where what could potentially have happened. Mm, okay, yeah. So here you can see that there is a nice supply, right? Nice week and a nice drop, right? Here you might think that the level is still gonna be valid. You draw it and you keep it on for however long. Yeah, you could do that, but then as time goes, it loses its validity, it loses its like how much is it worth? How much is that level worth as time goes on, right? So you rather stick to to the most recent levels than like use old ones, because as they get old, they tend not to get used as much by price. So for example, you say that it's a supply, but it gets broken, right? Whenever it comes back here, you might think that, oh, price is simply gonna like shoot back higher, right? Because supply can often turn into demand, right? But that does not happen. When that does not happen, all you simply do is delete the whole thing. Because whenever price does not like whenever price like through shoots through like while going up and then shoots back down like into that level, yes, it might come back as it did here, but it's not really a reliable uh, level to trade from, right? Because price could simply like could easily come here, like spike through just one small wick, spike through like this and then come back, and it's not really a reliable level anymore, right? Because it's not gonna like have you, it's not gonna help you like manage your risk and protect your your levels, right? Protect your entries basically to protect your trades from being wicked out, right? So and you don't want that. So it's better to use the uh, most recent, most recent levels depending on the time frame. If it's on the 1 hour, you don't want to use a level that was being used like 2 weeks ago. If it's on the daily, you don't want to use a level that's been there for like I don't know for like 2 months, right? If it's on the weekly, you don't want to use a level that's been there for like 3 months, right? You want there to be like at least I don't know, like recent. If let's say if it's on the 4 hour, you want it to be at least like at most 1 week old, a level that's 1 week old. If you want to use a level from the 4 hour, if you want to use a level from the daily, you want it to be at least 1 month old. If it's on the weekly, you want it to be at least uh, let's say 3 weeks old. If it's on the monthly, you don't want it to be older than 1 year. If it's older than 1 year, forget about it. It's not gonna price is not gonna react to it as you think, right? So yeah, that's pretty much it about the validity. And I can also touch on like refining your levels to find like to have like more accurate entries, right? So for example, uh it could be on the 4 hour, could be on the 4 hour, could be on the 4 hour, and hmm, let me find a way to define a level that needs refining. Okay, okay. I think we've used this, right? So here, this level we established it on the okay, not much on the what's the name? We use this level on the daily time frame, right? On the daily time, this is where we find the level, right? So you can if let's say price is here, you can refine this level and find like more accurate levels and more accurate level, right? All you gotta do is simply like uh, now find the median of whatever that's happening here and draw your supply or demand if your demand here in this case, or supply if it was the other case, or support or resistance if it's a lower time frame than this. What I simply do is I simply delete the whole the previous the unrefined level. But if you don't want to, you can simply like just change the color and make it a different color for you to be able to remember. Oh, yeah, for you to be able to remember, and yeah, pretty much do that, and then You see that price. It's better to have a smaller level than a hugest level where you don't know where like to get your entry from or to put your stop loss, because you always want to put your stop loss after the level, like after whatever highlight you put up, right? If let's say I was to enter off this engulfing pattern, I wouldn't want to put my stop loss here. This is 125 pips, right? Even if I was a swing trader, this is 125 pips. That's really not worth it. The risk to reward ratio is not going to be that attractive, right? But if I have refined my level, this if I'm a swing trader, this is just 87 pips, and a swing trader simply usually goes for way more than that, and you could simply go for this resistance over here and gain about 400 pips. So simple as that in a span of 7 days. That's those are nice pips for that short amount of time. So yeah, that's it for the video, and I hope this helped. I hope this shed some light on some confusion you've been having if you've been watching the other videos. And eventually we're gonna put up a video where you put everything all together to be able to to use it as a strategy, because this is just like explaining concepts and not putting up the strategy. Because if you have the concept and you do not know how to simply put up the strategy in everyday markets, then it's not really gonna be of much help. So eventually we're gonna do that, and yeah, hope that's like hope look forward to that, and more content to come. Again, tune in next week. A new video coming up, and yeah, that's pretty much it. So subscribe, like, share, comment, ask questions in the comment section if you have any. Shoot us DMs if you have any questions, and yeah.